Now that we've talked about mega deals, let's take a look at what's happening in the middle market of private equity. For that, we're joined by Andrew Hyman. He's the CEO and a managing director at Mistral Equity Partners. Mistral, a $300 million fund that invests in consumer-related companies like Jamba Juice, which we're going to get to in just a moment. But Andy, thank you so much for coming in.
Thanks for having me.
So you just heard Christina talk a little bit about what's happening on the big end, that some of these deals that look terrible now are looking better. Talk to me about some of the trends in the middle market.
Well, I guess the middle market's a little bit different because generally speaking, exits are not as dependent upon the IPO market. In fact, some of the companies, most of the companies are actually generally too small to go public. So what usually has gone on is that we invest in larger niches, as I like to say, where we try to build and grow a company and make it appealing to a larger company. So we sell to strategics rather than to the public market most often.
Well, I imagine then in that case that it looks like with the M&A market heating up that would be good news for you as well.
Absolutely. I mean, when you look at the investments we've made over the last 3 years, which were concentrated in things like private label food, where the consumer is very value conscious, and we were able to grow through the recession. Businesses like that are very appealing to strategics who are trying to either expand their private label businesses, or actually in some cases they're also appealing to big private equity firms much bigger than ours, who see what we've accomplished as a base for doing something even bigger.
Let's turn to some of his holdings. We've been talking about sort of private equity trends, but with the food inflation topic, such a hot one, as we've been saying, let's talk about Jamba Juice, because that is, I believe, the only publicly traded company in your portfolio.
That's correct.
And obviously it's a food company. I mean, what's going on that front in terms of input costs? We've been talking about grains, corn and wheat and all those costs going up. What about, banana costs and apple costs?
Well, actually, apple juice has gone up quite a bit. We actually have another juice investment as well. So we've seen apple juice go up quite a bit. Orange juice has gone up quite a bit as well. Look, I mean, what you have here is some combination of weather effects in things like fruit, but also global demand just, dwarfing supply. So I think while the government tells us we don't have inflation, I think your whole theme has been today that there is food inflation, and we clearly see it. Everyone does.
So what effect is that going to have on Jamba Juice, which I know has been sort of, for you guys, sort of a turnaround investment?
Right.
So when you're in an environment like this where the economy is getting better, but your margins might get squeezed, what do you do?
Well, there are a couple of things we've done at Jamba, specifically related to food. There are other turnaround aspects of the company as well, most of which have been accomplished. But in terms of the food costs, we've expanded the menu quite extensively. So things like oatmeal have added dramatically to sales volume at Jamba. And back to one of your earlier segments, one of your reporters was talking about Whole Foods. The Whole Foods customer and the Jamba customers are not too dissimilar. So they may be a little bit less price conscious. They may be way more interested in a lifestyle and a healthy lifestyle, and that's what we're appealing to. And if that needs to cause a price increase, it probably will. But
at the same time, some of your other holdings are private label snack foods, and there perhaps the eventual buyer of the food at the store is not necessarily going to be the highest level consumer. So what trends are you seeing there?
That's precisely why we invested in private label food. We sort of had a barbell approach when we started investing in this fund in 2008, which is, on the one hand, you have certain consumers that are extremely value conscious, and private label appeals to them dramatically. So a store brand potato chip or tortilla chip that's priced below branded chips is very important to that consumer who's extremely worried about the overall cost of his basket, let's say.
Right.
Okay, that consumer has been very active with us and continues to be very active. So thematically, we were deep into private label, snack food and other prepared foods.
Okay, and we talked a little bit about the other end of the barbell with Jamba. Unfortunately, we're out of time. But Andy, again, thank you so much for coming in. We really appreciate it.